All right, folks, welcome to February's first charting session. We have about 110 tickers, I think. First things first, I usually take like a minute to review the big picture. I only do a minute because I have a full review coming every Sunday night. So tonight, mine will be late tonight because I want to see what Powell says. I don't know what time he airs. Yes, Powell speaks. So I want to show you this thing here. The S&P is going to 530 to 560. Period. End of story. Unless something happens. Okay, so that's one statement. Now weigh that against, which by the way, we've been saying this for months, at least a couple of months, that the breakout that happened from this zone right there had a target of 30 to 102 points. Okay, so 530 to 560 is an estimate range, depends on where they want to have a hiccup. The Fed backtracked and nobody's listening as far as rate cuts, how soon, and all of that. But it is what it is. That's the breakout. Chart ABC in no headline mode is in a breakout with a measured move. That red stick is doable. Okay. And then if this happens, a correction can happen of about 25 to 30%. So if we do get to 550, expect a dip of 30%. I can almost guarantee it. That's how it usually happens. We break out, we come back to where we break out from, we touch base. And that would be the mode. So nothing to panic about, oh my God, he said we're going to drop 30%. From what point, right? I didn't say load up with calls. I'm just telling you the trajectory of the chart. So then I weigh this against the other oddity, which is a basket of 2,000 stocks cannot get going. They are still stuck inside of a very wide consolidation zone that could be measured in years. So this is where we're waiting for the IWM. I don't think the SPY can do anything much further than here, like in large scale, without having the companionship of this basket of 2,000 stocks. I've never seen that happen. You see underperformance once in a while, but you don't see diverging indices for a long time. Like index A goes from here to a new high and up and away, while the other one goes nowhere. It doesn't happen too long. So we'll see. I wouldn't I would be hesitant to add to shorts. So if I have shorts, last week I said I would add long QQQs, actually the week before last, because of the fear of last week's mega caps reporting earnings. I suggested in some point in the last week to buy calls because I am short a couple. I have two credit call spreads that are in trouble. NVIDIA is one of them. But I also own calls in the QQQ as I suggested in one of the notes. So as long as I'm doing that, I'm okay offsetting losses with the credit call spread. I would not add to my position as far as bearish. I am tactically bearish. If I see something going against resistance, I could try to short it via a credit call spread. I'm not shorting anything outright. Like I don't have any naked calls short except on Boeing because I have naked puts sold. So that's the status. As far as trading is concerned, I'm tactical. I would not invest in anything at this level as an investment. I think patience works better. I see a lot of opinions out there. A lot of younger, less experienced people are trying to make people with our level of experience feel like idiots. That's the same attitude that happened in 2021. I fear it's like the idea of the dumb money thing revived the pandemic trading mentality. So I would recommend caution and just watch for a couple of weeks. You might learn something that gives you more conviction one way or another. Okay, so there are some companies that are worthy of being up here, like NVIDIA and Microsoft. There are some companies that are up here in sympathy and have no business being up here. So pick and choose wisely. And there are some dips worthy of trades, like Team, for example. All right, so this is the big picture. Let's jump into the tickers you guys requested. And they are about 110, alphabetized. And so they will be in alphabetical order in 3 different videos. If you're new to the group, welcome. And if you're not, you know how it goes. So let's jump into it. Thank you for being here in person, by the way. I really appreciate it on a Sunday. So sorry, I may cough and not catch myself with a mute button. And my voice might be in and out. No screen. I will start the screen now. I did have the screen, and then I kicked myself out. And thank you. All right. The people in the room with me, no screen. They're screaming, no screen. Okay. All right. Let's go. Alcoa. And by the way, anything I answer, if you know that there's an earnings report coming, everything I tell you is out the window because it's about a coin flip reaction overnight. So the results of the earnings are important long term, but the overnight reaction is not about the quality of the report. It's about expectations. We've seen amazing quality reports and the stocks fall. Like who fell? Alphabet, and then it recovered, right? Apple's report was meh, and the stock didn't fall much, and then it recovered. So it's not about the quality, it's about the expectations. Okay. All right. Like Team grew 60% profitability, if I'm remembering correctly, and like 18 or 15% sales. So what else do you want? How could they have disappointed you, right? So it's about expectations. All right. So this company's stock has buyers below. I think I would be more comfortable at 27.50 as far as getting long if I'm a trader. If I'm an investor, I'm patient. I don't have any reason to to go long or short. There's a seller at 31, which means resistance into 31. If they can take out 31.5, they could get another $2, $1.50 or so. So trading perspective, if I go long or short, I'm guessing either way. I don't have real clues. I think it can meander up to 30.5, 30.6 this week. We'll see. Unless there's somebody like it reporting. Also, it could be sensitive to the US dollar, which might move big time on Sunday night and Monday. Because Powell is speaking, by the way. Yes, he's on TV, 60 minutes or something. I don't remember what happened the last time he's done that, but it is what it is. So, okay. Let me see here. Apple, nothing wrong with the Apple stock. What's wrong with Apple, in my opinion, fundamentally speaking, is its leadership. This guy will be the end of Apple's dominance. In fact, he is the end of Apple's dominance. You know why? Because quietly, Microsoft took over as the largest company on the planet by a good margin, and I don't think Apple can ever catch it again. It's done. And here's the other thing. I think Apple has a potential headline. What kind of a headline? I don't know. Berkshire cuts its... I'm speculating. I'm not spreading rumors. I'm speculating that there could be... Because fundamentally, it's a solid company. But it's going nowhere while all the other companies are going to the moon. In progress. Like they're growing double digits, and this one is single digit growth, like 3 or 4% maybe. And when you're not growing as fast, when you don't have AI stories, you're going to fall behind. They do have the mask that is being released. You see people walking on the streets with like ski goggles. Those are the $3,500 or $4,000 Apple. Somebody's posting a Cybertruck driver. She's got her mask on, not driving, of course. The truck is driving itself, and she's picking like this old Tom Cruise movie. So maybe that hit. Not a lot of buyers of $4,000 ski goggles, but it is cool. And maybe it's generation 1 that's expensive, generation 2 is cheaper, and they may get another source of income. They don't have a new source of income. They're still an iPhone company. So technically, if Apple loses 180, it goes to 168, 169. And if it loses 166, I don't know where it goes, 155, 150. So technically speaking, rallies will be met with sellers. So this week, if it goes to 192 and I'm long, I would probably be looking to exit or sell covered calls against my longs. If I'm an investor, please do your own homework, evaluate the company based on your own metrics. I'm just telling you, it's a solid performer. It's a dream machine. I've said that for years. The leadership is not there. Anybody could have done that. Stock would have performed just as well without a CEO. So fundamentally, this guy needs to be replaced. I feel an IBM situation here that's going to go in the doldrums for like 10 years. So this is Apple. Fundamentally, not exciting. Technically, solid, reliable, good support. But if they lose last week's lows, they might drift lower to 168. And I would exit on strength. Accenture, good company, way too high for my taste up here, technically speaking. If you break out into another high, you have another leg higher. So if you're long as a momentum trader, you can ride it. If you're looking to get long, I would get dips. I would get long into dips. 370 or lower would qualify as a dip. Depends on your speed. Okay, so if you're a person that trades like once a week, a dip needs to be deeper than 370. It needs to be like 364 with a stop. If they lose 364, they come to this area, which would be a good solid dip. But depends on your speed. If you're not that fast and you're not investing, I wouldn't touch this at this level. Adobe, almost the same comments. Great company, too high. Look left. What happened the last time somebody went long here? Boom, they got a haircut. How much? 12%. Earnings in 40 days, so that's not a threat yet. You should see who else is reporting that looks like Adobe, because we're still in reporting season. However, we have a higher low trend trying to break out of a prior fail. So respect it. I wouldn't short it. In fact, I am long, I think, one credit put spread that I shared with you. I wouldn't even be tempted to do a credit call spread against it to turn it into an iron condor. Just leave it be. Buy the dip. Which one? It does have support into 600. And as an investor, I am probably passing on this one until it, I'm definitely. So check this out. We do have a situation where it has a prior fail right here and then a prior fail right here. And that last here I just mentioned is a pretty big range from 640 or whatever the high was last week, to 700. So it's about $60. If I were to pick a number that's pretty suspect, 655 to 660. That's a better zone. You see a hard fail at 674, but I think anything above 650 is going to be a struggle. ADM, check this out. So I have not looked at this stock since we last reviewed. I don't know when that was, and I drew this. I said they pop and then they have a decision, either make a lower low like this or try to attack this prior fail. Well, they went with the lower low path. This is a normal path, and the target may have been met. 28 points. No, not even close. So it looks like a head and shoulders. I'm going to put the shoulder line right there. You see that line, how they fight over it? Like right here, it was super strong resistance, super strong support, breakout right here. Then support, then support, then support, and then not support. Boom, lost. So what's going to happen? They're going to try to get back as much as they can. And even if they get here, these are exit points because they're going to get smacked right back down and retest that low. This is a harsh drop. You need to find out what happened in Archer Daniels. Like, what was the disappointment? Okay. Is it like, did they still do perform well and they just, somebody's estimates were whacked out of their minds? So I'm going to add it to my watch list and see if I can trade it for myself or for us next week. Nobody came to me with this, so I missed it. Oh, the earnings are still not here. Holy moly, they must have pre-announced. Anybody know in the room? Let's see here. Law firm announces, class action lawsuit. Yeah, read about it. I don't know anything about them, so I will read about them. The earnings are coming, and if the company said something back, then that gives me a level of comfort. If they haven't said anything, it's like, oh, shoot, what's going on? AES. Earnings in 22 days. Good consolidation zone, spreading from 1740 to 1630. You can see the candle at 1630 and the bunch of candles at 1740. So that's the range. You have a seller at 1740, and I think the seller may prevail here. So there's just as good. How about I say it this way? I'll say it like I usually say it for Tesla. If AES is not at 1760 or higher on a closing basis, it's probably going to 1520, because you had a drop. And if you lose this bounce area where I'm putting the arrow, and I mentioned, you're going to end up here somewhere. That's my guess. AFRM, it did drop, not enough for me. Good company. Don't know what's going on with the credit cards. I don't know what's going on with the interest rates. The market doesn't even know what the hell's going on. So I'm going to take out a whole bunch of old lines for visual noise. Honestly, I don't think he's going to cut rates at all this year, at least not the first 6 months of the year. And everybody's expecting it, so we can delete that. It's useless. There could be a bounce back to 45, and then we'll see if they can get to 51. So it's a trading dip. If you want to buy the dip that way, that's fine. My concern is this. If you look left on the screen, there is a void here. So I'm going to say it differently. Two ways. As long as we are below 45, we are at 41. And if we lose last week's low, we're going to 32. Maybe even 29 and a half. And that's because there's no support. And they may have lost a head and shoulder. You can't see it. It's unconventional, but it's here somewhere. Whoops. You understand what I'm saying? Yes. It's very simple. Rewind the video. You'll know exactly what I mean. All right. So if I'm buying the dip, I will wait for that $30 and I will go long. I would sell puts to own shares. The company is good. I wouldn't mind owning shares. So this one, I would have said I wouldn't mind owning shares, and it is tradable for the long side. Dang it. The P&L looks okay. I don't know if I trust P&Ls that change that much quickly. I mean, NVIDIA did, but I don't know the business of this guy. Chemicals and all that stuff, electronics. I mean, here's the problem. Here's the good news. The good news is that every time it's been here, it's been a hard bounce. God help the stock if it loses the 111. I'm going to put an alert. I'm going to say what Scooby would say, rut-roll. Because if you lose 111, you're going to end up at like 80, 84, 82. Yes, this must hold. Otherwise, you're going down into the box where I just put the, 10 days to earnings. Well, we can't trade that. If I'm an investor, I don't add. I don't go all in if I'm looking to start a position because of the earnings. I will take a small bite. If I wanted 100 shares, I would take like 40 and then wait. If it gets punished on earnings, I would, and I lose 20 or 30%, I will add the rest, and then I would have a decent entry point, as long as they don't change the story of the company. Ally Bank. Be weary of banks. If we have a problem in the economy, it's going to be banking related. How? I don't know. They tell us the banks have good, solid balance sheets. And then yet we had 3 fail last year, major ones, 3 or 4. Why? Because it happens. Stuff comes up out of nowhere. Like, who knew that them jiggering with the interest rates so quickly, they moved anyway, they caused assets to drop from a bank who piled on to one type of asset. So I don't know what's going on with these banks. This guy used to be GMAC, not a great company. You remember the 2008 financial? This is the GMAC. This guy is now as a high-tech online bank. So there is no resistance that is near term, so it can go wherever it wants, but I would be aware that if it's rallying, the S&P is going. So why would I want to take on a potential financial crisis? Spending is super high, and if he doesn't drop rates, there's going to be people in debt that are in trouble. Like all these upstart loans, if you do the math, you're paying 50%. 50% of your money or more is going towards the interest, so you're making no headway. You would pay for like 5 years and you still not even made a dent in your loan. It's crazy. So I don't know what's going to happen with the consumer spending, so be aware. Applied materials, yeah, especially commercial. Applied materials, wow, it's breaking out. Yeah, so what is this breakout that failed? Okay, so this is not quite exactly the candles I usually fear, but when a chart does this out of nowhere, it pops and does one candle. In this case, it's two. If this was one candle, then I would tell you this one is going down to here. Because every time I've seen, like, the stock will be going da 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 da, and then poop, it gets a candle up here, and then within two candles after that, they do this. That's what happens usually. The drop continues much, much lower. I don't know if that's the case because these are two candles. But be aware that this is a tough line to beat. This rejection like that. Earnings are in 11 days. Earnings can push through it. So there's no rush to get long. And you should expect a potential retest of 152, which should be solid support, headlines notwithstanding. AMD, I would just pile in. Just remortgage the car, the dogs, the kids, and pile. I'm kidding. No piling in. This, I would say it very nicely. I'm going to remind us of an acronym I usually use for us. NOPE. What does that mean? It's not an insult. It's just a statement of fact. Not an obvious point of entry. Nope. I'm going to say that a lot today. So, nope. Why not? Because it's never been higher, and the stock market has never been higher. And I think it's riding the coattails of its cousin, NVIDIA. So that's my take. If I'm an investor and I haven't gotten long yet, I would wait out. You might get a dip to 166 this week or next. And if you're lucky, you might get it at 146. But the market has to drop. Second cousin indeed, and getting further and further from NVIDIA. That's good. So here's what's going to happen. Let me rephrase so I don't upset the super fans. It has an opportunity to make an all-time high. The markets have made an all-time high almost every day. So yes, if they take out 181, 181.5, they can probably take out the high and go to like 191. But if they don't get there, I think it's very easy to get to 168 and 160. Let me draw it. 168, they bounce. 160. Now, this red W is satisfied. That's target 2. Target 1 is here. Target 2 is here. Let's say after that, they do this. This is super good support. But if you fail that support, that's the target. Nick, you're looking down, the markets are rallying. What are you looking at? I'm looking at paths that can happen. And the whole thing started with me saying, if they don't do that, right? So if they don't take out the high, they need to go somewhere. I'm drawing you exactly how it's going to go somewhere other than the high. So if you're writing calls and you believe it's going higher, ignore everything I said. If you're looking for an entry point, Pick your spots along these lines and enter. So if you're a dip buyer, buy it here and exit here. Or buy it here and exit here. Or just get long here with a stop. That's all there is to it. Or sell a put spread below all of these and go home. So I'm giving you ideas on paths that I've seen happen. Amazon, again, nope. Great company, one of my favorite company of all time, under Bezos. I don't know this new guy. I don't like the fact that the first time he's in, he pays a dividend or something, whatever he did, buyback. Like what? You ran out of ideas? So let me zoom out and remind you of the red path I drew for us, probably on camera before. So inverse head and shoulders, that's the target. Then it would finally make an all-time high like everybody else. Pardon me. Okay. So what do? Dip buying opportunity. Where anywhere into the breakout zone. 148, 150, you pick. If you're a long-term investor, I mean, it's better than chasing AMD. At least this one has some more upside. But even though I love it, I wouldn't take longs that way. I would sell puts to own shares. I'm going to introduce you to a term, stock alternative or synthetic stock. Instead of buying shares, consider looking into selling puts to own the shares, which gives you money, using that money to buy a call or a call spread out in time. So this way I would be engaged long from much lower prices with virtually no money out of pocket. So I am, quote, long Amazon, but not chasing at these levels. I would leave some buffer zone. Okay. ANF. Mystery. Okay, I'm going to have you be the judge. So the only thing I haven't checked is the metric is the profitability. Has it been improving? Statements. Let's see. Income statements. Net income. Let's go to annual. Easier to see. So there's no clear improvement on, like I'm looking at the revenue, the margins. They're not like getting better, and the others are getting slimmer. See that? So I'm going to have you be the judge. And first of all, I hear that there's a very shocking story that could break out about the CEOs. Let's put that out there. But for some reason, it's not breaking out. Maybe it's false, but whatever it is, I'm not going to say what it is. Google it. And technically, let's go to a weekly chart, and I'm going to have you compare it. What is the best company right now? Which company saved the world last year? In my book, it was NVIDIA. In May, NVIDIA said, I'm going to pretty much double my income in 3 months. And then when they reported and said that in May, boom, everything broke out. The S&P was dragging its feet. The QQQ was already broken out. But the S&P took off. Microsoft followed. Everybody else followed. Google followed. Oh, yeah, AI this and AI that. Stop listening. I'm talking to my phone now. And so that's NVIDIA, right? Now we're looking at the ANF. That is the best chart I may have ever seen in my entire life. Better than NVIDIA chart. Check it out. This is NVIDIA. It has had dips right there. It's consolidated a bunch before it broke out. Not ANF. The investors are so confident it's an awesome company. Look at it. Not a break. And look at the P&L. Not a stitch of improvements. If anything, just choppy. I'm going to show you the NVIDIA P&L. Look at it. Sales doubled and then doubled pretty much. Income more than doubled. Quarter over quarter. This is not year over year. Year over year. It's another thing. Just quarter over quarter. So impressive performance here. Not as impressive as ANF. What am I saying? Who's buying this up here and why? Please tell me. I'm short and I'm losing money. Luckily, I chose to buy a put and I passed my stop. I did send out the put out and I did say I would stop out at 35%. I fell asleep at the wheel. Small bet. I didn't add to it. I was tempted. My guess is within 3 weeks, we should have something. And I may lose the money on the put, but that's fine. Hopefully, I would stop people from going long. I don't want you to add because every dip is being bought. I did notice a rhythm to the stock. I believe it was on the 1 hour. Yes. So you can see from here to here that rhythm. So every this much it has a dip. And if that's the case, that's how I came out to the 3 weeks. So it might have a little dip in the next 3 weeks. So we'll see how they handle it. Not for me at this level at all. And I am short and losing money. That's disclosure. APA looks like it needs a bounce ASAP. And if it does, it might get to 32.5. And then if it gets to 32.5, it might have an opportunity to pop from there. So this is going to be a problem once they get to it. But if they take it out, it's an opportunity to pop from there that way. Meanwhile, you cannot afford a few red ticks. And you have 17 days before you end up facing an uncertainty of a headline. Hey, what happened to that other one? Oh, well. Okay. So ping pong and don't lose the base. Investment wise, do your homework. I don't know the company. I feel like I spoke about this yesterday in the live or Friday. Boeing. I went short for us, and wait. Last year we traded it a couple times. The credit call spread got in trouble. I went long on the dip, and the trade is under fire, but it's still statistically viable. And the earnings went away with no hiccups. So I'm still long, and the sold put or put spread is under fire, but it's still viable in my book. If you feel iffy about it, reach out to me, and I'll walk you through the logic. I recently sold calls against my sold naked puts to create balance in my book. But I'm not shorting it here. It's a good company. It's a headline stock. If you have profits or if the order is too big, maybe you get smaller a little bit to get confidence. But the stock itself, as far as Boeing, let me go back. It has a technical breakout opportunity at 218. If they can get to 218, they can probably get like $6 or $7 more. And I feel like the 3 bounces that they've had inside the support zone are pretty solid. This is a solid support zone. When you have a solid support zone, you better not lose it. So if you know what happens and they lose 197, they can lose $15 pretty quickly, where it would be a super solid support zone. Like anything inside the zone, look at the rally that happened after they got there. I'm confident of the levels I shared. Like if I'm assigned shares below 190, 185, I will take the shares. I would not defend the credit put spread, but that's just me. BHP. Ooh, I haven't traded that in a long time. P&L looks okay. Semi-annual, that's a little weird. Kind of a, what is that? Anyway, the Bears are in trouble. If they go above 48, they're going to get to 49. And weird setup scenario under 46.60. It's kind of a choppy stock. I couldn't tell you where they want to go. I can tell you this is a weird scenario right there. So I would assume that, yeah, look at it. It's pivotal zone for a bit. So they're stuck inside those boxes. From an investment perspective, there's nothing to do. I don't know what that is. Wow, look at the sales lines. Quarterly, flat, annual, pretty good. So what do these guys do? Banco Marco. Bank of what is this? Argentina. Okay, so I don't want U.S. banks. I definitely don't want Argentina banks. And a stock that's this high. This is probably going to 31 or 30. Brookfield. Another company I don't know. What's going on here? Private investment products. Okay, no thanks. From an investment perspective. Charting wise, the best buyer is below 37. Consolidation zone, 37 to the high they just had. If you can take out the 41, maybe you can get the 44 and then heavy sellers there. So you have to battle every prior fail, like seller, seller, seller. You're making progress. You broke out from here. Come back and test it. What's this candle right there? Earnings in 4 days. Yeah, not for me. Okay, so Ali, the way it works, on Friday, I sent out a note saying, please give me the tickers you want me to review today, because I organize my session alphabetically. I can't just infuse tickers. Hopefully somebody asked for those. We're at B. Nobody asked for BABA, so at the end I could give you your tickers, but that's not how we should do things. Let's just do it in order. You know, we have. Yeah, I understand, but the write-up on Friday. So the first thing to do, Ali, is to read the write-ups if you want to be involved and get the most value out of it. And I do 2 write-ups a day. So it just takes 5 minutes to read them, I promise. I'll do those tickers at the end. If I still have a voice. Awesome. BX. So this one we've traded a few times. It got inducted into some ticker index, maybe the S&P or the Dow. I can't remember. I think it's the S&P. I would go long if it falls into 117 via credit put spread. If you twist my arm here, I would probably do an iron condor like we've done before. It just moves too much for being a stable company. Oh, forget stable. What's going on with the P&L? Yeah, I don't like to trade this ticker. We've traded it several times successfully. Support at 116, resistance at 128. You take out 128, you're probably going to get to 134. Citigroup, not for me. I'm short the XLF. I added to it, so I'm even money. Actually, I was green on Friday at one point, and then the XLF rebounded. I think we have a situation with the banks, and it's an easy short. Easy meaning it doesn't take a lot of money to do it if you just buy a longer dated put and just keep it under wraps. Citigroup looks like it's breaking out. I don't want to pick on it specifically because I don't know its business. Look at 58. I want you to look left. It's surprisingly accurate in history. Look at that. Look what happened at that same level here and here. And here we are. So this is a point in time, a level. Ooh, look at that. You see, markets have history. This one right there. And a gap. All right, so now it becomes intriguing. Let's do this. Coordinates. Minus 10,000. Let's go back in time. 1 week. Look at this 1993. Look, fail, breakout, retest, breakout, never revisited until the 2008 crash. It failed at these levels in 09. 2015, I remember that. They broke out probably somewhere around 2016. And here we are again. So this line is very pivotal. Respect it. I'm going to change the color to Tom Aquamarine. This deserves to be an aqua line. A fat aqua line. Excuse me. So this is an important spot. I wouldn't start longs at important spots. Buy the dip so then they can come out and take it out if you believe that it has much more upside. Cart. Whoa. Yeah. No bueno. Maybe they're establishing a base. you have support short term into 24. And unfortunately, you also have a lot of sellers into 26.3. So ping pong between the two. And 9 days until the earnings. If I'm long, I'm not adding. Cracker Barrel. You're going into a prior fail. Not a good place to get long unless you're a momentum trader and you're looking to break out. If they break out of this prior fail, they can get to 88. So what happens at 83.5 will determine whether they go to 88 or not. And if they do go to 88, I would exit. Look at this tail right there. 86.5 is a pretty tough fail before. It's a tough loss, I should say. What I would do, personally, if it dips into 77, I would be looking to buy that dip to see if they do that. So if I'm an optimist, I should have been long already. If not, I would wait for the dip to do this, or wait for the rip and buy here. That is, if somebody does this, I bless them as a good trader. Somebody that buys a call going into this, I don't want to say it's a bad trader. It's not an ideal entry point. That is like the worst time to get long, because you're buying, or actually this is the worst time to get long right there after you see the breakout, because you're buying the hottest call. So if I buy the call here or here, I paid like 20% less here and I have longer travel. Anyway, it's a conversation to be had. CCL, it's a good long here. You have support below. You have a pattern that says maybe 1740 is coming. And if you're patient, you might even get 1820 out of it. So no headlines in the next 46 days, at least not scheduled. However, you need to see who else reports that looks like it. Like, is RCL reporting or NCLH reporting? You need to know, because they move in sympathy. Technically, this is a sound long here. Actually, I'm going to add it to see if we can squeeze the credit put spread. CELH, Celsius. Yeah, not for me. It seems like a meme stock. I'm a fan of energy drinks. I don't drink as much now. Someone just gifted me a case, so I'm forced to drink it. I quit buying energy drinks, and Celsius does nothing for me, but I see it in the hands of a lot of trendy people. So it's hot these days. If it holds 48, you've got that base, and you might get to 58. I think there are a lot of sellers at 58. It might be easy to get to 57. It's not going to be easy to get out of 58. And you do have scattered support. Earnings in a month. Oof, what happened here? Okay, so we're starting to get some trade ideas. Anybody know anything about CH? CH charter? It has a habit of just dipping at or before earnings. What's going on here? Here's a dip, here's a dip, here's a dip. All right, let's zoom out and see what's the daily chart look like. Okay, so once they lost that neckline that they lost right here, that's unfortunate, because technically the drop can be as big as this. I think it should be as big as this. So even if you take my size of the drop, that puts it below this, and good grief if they lose this. Oh my God, draw a straight line, Nick. And actually, I'm going to do it a straight line. This is important. You cannot lose this base. If you do lose this base, you're going to like 180 or 170. No joke. But that's big if. Okay, look at this big dip right there, and see that it's not a one-day event usually when the stock drops this big. If I'm a fan of the stock, and I know, and I'm not long, and I know that this is going to be like a passing thing that just happened, I would sell puts to own shares down here. So I'm going to do homework on this one fundamentally. Technically, it's broken right now. CHWY, it's inside of a support zone. So I could sell puts to own shares, half of a position, or I can buy shares, half of a position. The only caveat is that um, the stock market has never been higher, and this one is trying basically to hold support. Those are not good. What happens to this one if the stock market corrects? It will fall a little bit more too. How much more? I don't know. It depends a lot of consumer spending, right? And a lot of their 70% of their sales are consumables, and so like the sales are not going to fall off a cliff, but they will feel the ding, and people will sell the stock whether they feel the ding or not. Like they sold it down from high heaven, and they wouldn't stop selling it. I think they went past the pandemic levels. Is this a pandemic, baby? No. So let's see here. Yes, the stock is still way below the pandemic lows, so it makes no sense, right? So people have bought into the idea that CHWY is in trouble because people have less money to spend. But I think they buy basics for their dogs and cats there. And so as much trouble as it has been, I think that's it. However, technically, if you lose the base that you established on October 2023, in October 2023, this could be a single digit stock. That's why I said half position. Why? If that happens and it goes to $9, then I would deploy the second half and I'd be long down in the 12s and 13s. Especially if I'm selling puts. Okay, hopefully that makes sense. All right, Cigna, is this it? Yes, Cigna. I don't know the industry very well. Technically, it looks like it wants to break out from 319 or 320. But you're running into this giant batch of sellers potentially. That's overhead supply. So it's exciting. It's looking to break out. It's got strong higher lows. Good reaction to earnings. So let's see what happens into 330. Ideally, it goes back down to 305, establishes footing, curls back up, and gets higher. That's the ideal move. Costco, amazing run. That's the other credit call spread that I mentioned I had in trouble. I did defend it because of I sent out a note about that because of they had an ex-dividend date this past week, and the sold call was close to the money, except for that one day. It dipped on it. Lucky, but if somebody didn't do anything, they may have lucked out of nothing happening. I paid $80 to protect it per contract. And I'm still in it. I basically rolled up my position, but I'm still in it. So it's under fire, and the stock is very volatile and very positive. So every dip is being bought like almost NVIDIA. It's deserved. It's a great company. The P&L is amazing. It's like an Apple company where the people that shop there will never consider shopping anywhere else. And so they're buying dips into 700. Depends where your position is. My position was way riskier than the ones I wrote up. If you're in the 720s and you're winning, somebody told me that their position was winning and they closed it. If you did that, awesome. So if you need help managing your position, it looks okay so far, but it is under fire and the market is relentless. CRM, good company. I would buy the dips. This is too high for me. I think earnings are coming in about 24 days. 24 days. What dips? 276 looks like a zone. For me, if it gets to 276, I think it gets to 264 or 265. So it's a no touch for me. I should tell myself, you missed it, catch it some other time. We've traded this one before over the years, and maybe more than a decade. And I'm patient. When I miss a stock, I just leave it alone. There are plenty other ones that are inside support zones. Nothing against it. It's a great company, good leadership, and all of that. In fact, CRM is the one that gave us the cloud. They invented the idea of the cloud, software as a service, where everybody makes their bread and butter now. Imagine Microsoft still under the Steve Ballmer days without CRM ideas. Adobe, Like, who would spend $500 for software? But a lot of people spend $15 a month, right? So that's the CRM. Salesforce.com invented that, and Amazon built it. Cisco, look at this choppy things on the left. If you lose Friday's low, you're going to 48.4 quickly. And if it's going to be a struggle to get out of 51, but if you do, you might have some open air back for another dollar above that. Right here, you're in the middle of the zone. I wouldn't do anything. It's a matter of volume. Where are they interested in it? Okay. I don't know a lot about the company fundamentals. This looks like a suspect P&L. It's just too good. So you have to zoom in and then look at that. What is this? So it's not seasonal because we have 5 sticks here. If it was seasonal, you'd see that. It's almost like a Zim story. What's going on here? How do you improve so much over 1 year, and then quarterly you start going back to pretty much nothing compared to what it was before? So do your homework. Make sure that the story is sustainable the way it is. A lot of support below 23.50, and there should be like an absolute bottom at 22.50. That's what has happened. So I would trade with that mentality. The risk is if you lose 24, your target is probably 21, but I don't think it's easy to get there from the chart. And if you take out 26, you might get to 28. Hopefully that gives you enough. Earnings in 18 days, so it's kind of hopefully they don't pre-announce or anything. Sprinkler, I don't know what that is. Technical opportunity, $13. You break out of 13, you probably get another $1 or $1.50. And you do have buyers scattered below. So if you want to buy the dip into 12 or 11.8, good job. And if you're patient or lucky to get the 11, 11.20, that is like where everybody wants to trade it. Of course, if you lose 11, wherever they want to go, they can. DELL, make sure that other airlines are not reporting. This one, it reports in 67 days, but it will react to other airlines. Stuck in the middle, you got strong sellers, strong buyers, nothing to do. You do have support at 38.5. You do have resistance at 40.65, 40.7. That's the immediate range. Deer, boy, I saw a deer today. Before I hit it, no, I'm just kidding. A giant tractor that was climbing down the mountain with a huge set of lumber on it. It's like, that is an impressive piece of machine, and it muddy, and wow, very amazing. The stock has all the upside opportunities because they're in everything. And I don't care. I think it's recession proof is what I'm saying, the kind of business they're in. $3.99 or higher gives you the opportunity to get to $4.15, recognizing that a lot of sellers are at this peak, which is 406-ish. Conversely, you have a lot of buyers. Immediate buyers are at $3.85. Stronger buyers are at $3.76. And if it gets to $3.66 or lower, super interesting. I'm going to put an alert. So theoretically, it's available to sell put spreads, but their earnings in 11 days. I'm confident the earnings will be great. How people will react to them is the unknown. I bet you if you look at this earnings reaction back there, which was a huge dip, the report was good. And then, but people's expectations. Yeah. So anyway, we've had this conversation before. And DELL, I don't trade DELL. It's always a headline stock, and it's an awesome trend. Look at this. It's amazing. I bought a computer from them this year. It wasn't cheap. So 76 is the base from which they broke out. For me, I don't touch it unless it goes there as an investor. Up here, I mean, if you're a momentum trader, yeah, be on board. But I missed the easy entry. I'm not going to chase it. Danaher. I feel like we did that. Oh, ADM. Okay, so this is a target. This is an exit point. This is not an entry point. Look left. Every time somebody got in here, got hurt. At some point that will change. I don't want to be the chump that bails that person out. So this person has been holding a bag of poop for a long time. I'm not going to be the one that says, hey, let me take that bag from you right here. Let me hold it for a little bit. Maybe this time it's better. I don't know. Buy the dip. Let them come down and get long. I don't know why I put that there. That's what's happened before. Yeah, I guess. So be aware that it could fade. Okay, video 1 is over. Let's stop recording.